It is time for another Mortgage Minute with Frank Napolitano from Mortgage Brokers Ottawa. Now, he's going to answer some frequently asked questions about home financing and the housing market. And we do want to remind you that Mortgage Minute is for information purposes, and you should consult with your mortgage or financial advisor before making any decisions. Good morning to you, Frank.
Good morning.
Always great to have you
Always
on.
Great to be here.
Yes, because we have to pick your brain. Many questions. Today, no exception. I got a question for you here. Okay, the Bank of Canada has paused interest rates again. We've had a weaker than expected job report and a flat GDP. Could mortgage rates drop soon? Yeah.
Bond market, very influential in what happens with fixed rates with the banks, has dropped 50 basis points, so half a percentage point in the last 2 weeks alone. So you would think we've seen mortgage rates come down. We haven't yet. The lenders tend to take their time dropping them. When bond markets go up, they're pretty quick to react, but when it goes the other way around, they want to make sure that they stay down. It certainly feels like they're going to stay down, so expect to see fixed rates come down. They're still high. I mean, you're still in the, anywhere between mid-5s to mid-6s, so they're still extremely high considering what we've experienced over the last 20 years, but nonetheless, expect to see that trend continue, I feel, over the next 4, 5, 6 months.
Right, not a major drop before then.
No,
right.
Bank of Canada Prime, if you're in a variable rate mortgage, the likelihood is that it'll probably be spring before the Bank of Canada starts to drop Prime, but we should start to see the fixed rates drop before then, throughout the winter, hopefully.
Okay. All right, next question for you. The latest OSFI announcement says that if you have a default insured mortgage due for renewal, you can switch your lender or bank for a better rate. Is this going to be helpful for Canadians worried about being able to pay their mortgage? Frank?
Well, 5 years ago, anybody that bought a house with less than 20% down would have gotten default insurance. So anybody that buys a house, even if you bought a house 10 years ago with less than 20% down, you have what's called a default insured mortgage. So what OSFI ruled a few weeks ago is that if you switch your mortgage from one institution to another, the stress test doesn't apply to you. And the stress test incorporates having to add 2 percentage points to the rate that you get on your contract. So if you've got a default insured mortgage, their ruling is that you can switch your mortgage from one institution to another, and you can qualify based on the contract rate. You still have to qualify, and you couldn't have done a renewal in the meantime. You couldn't have done not a renewal, but a refi. You couldn't have changed the terms of the mortgage. As long as you leave the terms of the mortgage the way they are, the amortization the way it is, you can switch without having to qualify under the stress test. So that's really good for a lot of Canadians because they're coming off of 3.5% 5 years ago, and now we're in the 5.5% mark. So it's 2 percentage point already increase on your payments. It's nice not to have to qualify at 7.5 and just qualify at the 5.5.
Is this something new, or has this been in place now for a moment?
It may have been in place, just nobody caught it or nobody saw it, or OSFI just ruled on it because it always made sense. It just, banks were told and lenders were told that you have to qualify it at the contract rate plus 2. And all of a sudden this ruling came out, which is, again, really good for Canadians that already endured with having to go from 3.5% to 5.5%. So this is good for them.
We got a final question for you, Frank. We've owned our home for 12 years and have 8 years left to pay it off. We're really struggling with the high cost of everything and have sacrificed things that we love doing. Our mortgage renewal is in the spring, and we're likely to increase our amortization by 5 years to allow us to do what we love again. Are we making a mistake by increasing our amortization?
It's a great question. It's something that I get a lot of calls and a lot of emails on from clients that are concerned about just overall how much of their money is going out overall just to stay afloat. So for a lot of clients, the increase in the amortization does make sense because life could be short. I mean, you really want to enjoy your life. And the other thing that I say to a lot of customers, and it really makes them feel good, they forget about the equity that they've built in their house over the last 5 years, specifically during the 2.5 year period when COVID was happening and house prices went skyrocketed. So, I say to a lot of customers, listen, you bought your house 10 years ago and you paid $245,000. Today it's worth $650,000. Your mortgage is down to $180,000. Did you ever imagine that in such a short period of time you'd have $500,000? Technically, that's $500,000 in your bank account if you ever sold your home and paid off your mortgage. So instead of focusing on paying it off in 8 years, it's okay that you got to add 5 years. And listen, just because you increase the amortization now to 13 years because the interest rates are high, doesn't mean that if you took a 5-year mortgage 5 years from now, the interest rates are back to normal. You can now increase those payments again and lower that amortization. So, I might not add it 5 years. It may only add 2 or 3 years to it, and it's worth it.
Yeah, exactly.
I think your
Especially you don't
lifestyle's
want to
worth it.
struggle.
I agree.
Right? If you can add a few more years on the amortization and then you have a happier,
Relax.
easier life.
Relax. Especially if you have kids that are in
Yeah.
their teens and you want to experience things with them before they move out. There's so much more to life than just being mortgage free is nice.
Yes, sure.
But if it takes a few years longer and you enjoy your life, I think that's nicer.
Frank Napolitano from Mortgage Brokers Ottawa, thank you.
Always a pleasure, and please continue to support local businesses and charities.